Give me the breakdown. What did we learn today about the lockup?
Exactly what we had expected, that there was 1.7 billion shares outstanding. A large swath of them have traded hands, like you said. It's the most widely traded stock today. And that a lot of people are just sick of waiting around for it to get better. And so we saw the stock fall. And again, there are some questions around whether this could continue, considering that a number of the very early investors are not yet are not underwater, and they could see potential upside.
Walter, the volatility today, is this a day's issue, a week's issue, or a months-long issue?
I mean, the average daily volume is 15 million shares, as Lizette was saying. You're talking about 1 billion shares that are coming off of lockup. So, I mean, some of those shares are probably not going to trade. I don't think SoftBank, who owns about 200 million or so of the shares, is planning on selling anytime soon. They're pretty bullish on rideshare and have a number of investments. But there's some, the founders of the company, we'll see what they're planning on doing. There's some early venture investors in there as well. There's a host of other of investors. So it could take more than just a couple of days, I think, to digest through this.
Lizette, I want to take a look at a chart that I'm showing for our Bloomberg audience inside my terminal, and it is the bearish sentiment around this stock that we've seen recently. There's 1.4 puts for every call, which shows more bearish sentiment as we were heading into this. Put that bearish sentiment into perspective for us. We knew that this day was going to come. Do we expect more downside risk ahead? What are investors saying?
Investors are also taking their cue from the results of Uber, who reported on Monday. And at that time, it was mixed, it was noisy, and the upshot were a couple of things. One of them was that the growth was the slowest at 29% a quarter than has ever been reported since the company began sharing that number. That's not a good thing, because this is a company that has always sold investors on its growth potential as it went to 60 plus countries and entered things outside of its core ride hailing into grocery delivery, autonomous driving, helicopters, gig worker matching, etc. So that's one thing. And whether it's going to continue or not, anyone's guess. I know that a lot of people focused on the fact that it projected it would be EBITDA profitable by Q4 2021. That's a number that's a projection that has never been shared before. And I was supposedly to reassure investors, but it doesn't seem like it worked.
Walter, give me your take here. Does the bearish sentiment line up with the fundamentals that we got from the company this week?
I mean, part of it, like the sell-off in these types of stocks, is not just happening the last couple of days or weeks. It's been going on for months now, right? Whether you call it growth, momentum, unicorn type stocks, there's just been a disfavor, and there's no positive catalyst on the horizon for this company to turn that. I mean, the Eats business and the incremental competition that they're feeling, which resulted in a deceleration of growth, which is an incremental negative, that doesn't seem like it's going to stop anytime soon. And I think that catalyst of saying, hey, we're going to reach profitability in 2021 was probably wasted ahead of what was $1 billion, or excuse me, 1 billion shares coming off of lockup. It's still questionable whether they can actually hit that target. So in the meantime, you've got a competitive Eats business. You don't have autonomy coming as a potential catalyst, I think, anytime soon. So it's just hard for investors to own these types of names when you're relying on things like revenue multiples to base your valuation.
Walter, I have a little bit of a bone to pick when we talk about adjusted EBITDA, meaning the company's profitable. And to be clear, right, we're not talking about net income or an absolute bottom line profitability. Are you okay with adjusted EBITDA being positive by 2021, or would you like to see that translate down into net income?
I mean, I'm fine with it. I'm sure most investors that invest in these types of names are going to be fine with it. I know it makes for better headlines to focus on a net income number, but the reality is that EBITDA represents the cash, or more closely associates with the cash generation of the company. You also have to look if it's a capital intense business, which this business is not. So if they can get to that positive EBITDA, you're going to find a broader group of investors that are willing to invest in this name and put multiples on EBITDA rather than relying on a multiple of revenue or bookings.